Hello students, Assalamu alaikum. Today we are going to solve MCQs for A levels. Here is your paper. Okay. Bismillahirrahmanirrahim. Uh, October, November 2021, paper 13. Okay. So I'm trying to solve AS MCQs as much as for papers possible because the exams uh, in Pakistan, the AS MCQs paper is on 10 June. Okay. So here is I have to share again. Okay. Now, this is question number 1. A company does not include in the financial statements the value of skills gained by its employees from training programs. This is money measurement concept. Money measurement concept. It is because we cannot measure the skills of employees in terms of money. Okay. So, answer is question number 1, answer is C. Okay. Now, the following transactions took place with owner's withdrawal of inventory for private use, purchase of shop fixtures on credit, writing off an irrecoverable debt. Which transaction would be recorded in general journal? Okay. Do you know all these 3 transactions will be recorded in general journal? So the answer is A. Getting my point here? Question number 2, answer is A. Now, answer 3. Question number 3. The accounting year end on 31st December 31st. The company purchased a motor vehicle on 1st January 2020 and incurred the following costs. Cost $30,000, of which half was paid by check, the balance was paid by a bank loan. Loan interest for the year 31st December 2020 was $2,500. Delivery cost $2,000, engine improvement cost $4,000, repairs and maintenance costs for 3 years, $5,000. The motor vehicle was to be depreciated by 20% using the straight line method. What is the depreciation charge for the year ended 31st December 2020? In this question, what we have to do? We have to include only capital expenditure while computing the cost. Okay. This loan interest is revenue expenditure, not part of cost. Getting my point clear? This is not part of cost. Okay. And this repair and maintenance cost. This is also revenue expenditure. Okay. Now, capital expenditures, we will add, here's my calculator, 30,000 plus 2,000 plus 4,000. Answer is 36,000 multiplied by 20%. 7,200 is the depreciation charge for the year 2020. Okay, so B option is the answer. Okay. Now, again, a question from depreciation. A business sold a non-current asset. It has been purchased for $15,000 with an estimated life of 10 years, no residual value. It was depreciated using straight line method. It was sold after 6 years. Disposable costs were 1,000 and there was profit on disposal of 3,000. What was the sale price? Very easy question. 15,000 divided by 15 or divided by 10. 1,500 is the depreciation per annum. Multiply by 6 years. That is 9,000. Okay. Plus 1,000. 9,000 is the total depreciation after 6 years. 1,000 disposal cost. Total expenditure 10,000. Plus 3,000 profit. It means the selling price would be definitely which option? Selling price would be definitely which option? $10,000. This is your answer. Okay. Now question number 5. Which statement about depreciation charge for the year are correct? Okay. It is a non-fund expense. We don't need to pay any cash while computing depreciation. Debited to provision for depreciation? No. It is always credited to provision for depreciation account. Okay. It is only debited when provision is debited when we dispose the asset. It is only provided on non-current asset with an estimated useful life. Yes, this is correct. So 1 and 3, answer should be yes. Option B. Got it? Okay. Now, question number 6. The sale ledger control account of a business showed a debit balance of 26,400. Okay. Sale ledger control account 26,400. Okay. Contra. Achha. Now these items appear in sale ledger account but had been omitted from sale ledger control account. Contra item minus 340. Discount allowed minus 56. Dishonored checks plus 62. Bad debts minus 438. The answer is 25,628. It means B option should be the answer. Answer is option B. Got it? B option is the answer. Okay. Now, which are reasons for preparing a trial balance? To assist in the preparation of financial statements? Yes. Okay. To detect all the error in the books of accounts? No. Trial balance can only detect errors affecting trial balance, not 7 errors which are not affecting trial balance cannot be detected by trial balance. To find out the balance of the suspense account? No. Not always. So B option should be the answer. First statement is correct. Okay. Now come to question number 8. Okay. The following information is available for the telephone account for the year ending 31st December 2020. I have told you that this kind of question should be done using the formula. See how to use the formula. 19,000 we have paid during the year, minus 5,000 has been refunded. 18,500. Okay, now take accrual. Accrual at end should be added 5,000. Accrual at start should be subtracted 2,000. Prepaid at end should be subtracted 3,000. Prepaid at end should be added 1,000. So the answer is 19,500. Yes, C option. Okay. C option is the answer. Getting my point clear? Okay. This is question number 8. Okay. Now question number 9. A trader calculates dark profit for the year 16,000. Okay. Now the following items had not been adjusted. Decrease in prepaid insurance for 400. Now see class. When we add 16,000, if prepaid is decreased, see what will happen if prepaid is decreased? Our expenses increase and profit is decreased. 16,000 minus 400. Okay. Now what about this 1,200? Increase if we increase closing inventory, it means our cost is decreased, profit is increased. So add 1,200. Okay. A decrease in provision for doubtful debts means increase in profit 120. Okay. And increase in accrued rent means rent income is increased, in profit is increased. Plus 300. Answer is 17,220. That is option C is the answer. Okay, 17,220 is the answer. Okay, come to question number 10. An item of capital expenditure has been incorrectly treated as revenue expenditure in the financial statement. When we have included an item of capital expenditure into the revenue expenditure, these two options are useless now. Assets can't be overstated. Assets are always understated when you move capital expenditure to a revenue expenditure. So answer could be C or D. Okay. Now, profit for the year. Revenue expenditure means you have increased the expenses. So profit is also understated. So it means D option should be the answer. Getting my point clear? D option is the answer. Now come to question number 11. They've asked for the closing balance of the capital account. Achha. At the start of the year, we are giving current assets, non-current assets, current liabilities, drawings and profit. So what we have to do, first we have to compute the capital start. What was capital start? 45,000 non-current assets plus 17,800 current assets minus current liabilities 11,300. Capital start is 51,500 plus profit 6,950 minus drawings 5,000, 53,450. It means B option should be the answer. Okay, 53,450. Answer is B. Okay. Now come to question number 12. A trader did not keep full accounting record. The following information was available on 2020. Okay, trade payables on 1st January. Okay, what we have to do? These always appear on the debit side. These items appear on the debit side of purchase ledger control. Add them. Okay, add them. 43,630 plus 72,830 plus 3,450. Okay, now this appear on the credit side. So subtract minus 32,785. 32,785. Answer is 87,125 is your total purchases. So D option should be the answer. Okay, now come to 13. Okay. Now, how would a transaction affect the owner's equity of a sole trader? Okay. See, let's see. Now, paying the owner's personal motoring costs from the business bank account, that would decrease the capital. Okay. So it means this in this question. Option C and D are useless. Okay. Now, decrease. Achha. Taking a long-term loan to finance the purchase of a new machinery, this transaction is not going to affect the capital. So A option is the correct answer. Question number 14. A partner is retiring from partnership business. What is the correct accounting treatment of goodwill if no goodwill is retained in the books? First, we record goodwill by crediting goodwill in old profit sharing ratio and debiting goodwill into new profit sharing ratio. So option A should be the answer. Okay. Now, 15. X, Y, Z are in partnership, sharing profit and losses equally. At 31st December, X had a capital account balance of $100,000 and a current account credit balance of 80,000. On 1st January 2021, X retired. Non-current assets and goodwill were valued upward by a total 60,000. Now, see, 100,000 is the total capital of X plus 80,000 credit balance means he has the profit which he has earned during the in the previous years. 180,000 we have to give it to him, along with 20,000 share of goodwill and revaluation. That means 200,000 we have to pay to X, but we are paying half amount. It means 100,000. So C option should be the answer. Getting my point clear? Because we are paying half. Now, 16 is here. A company A company had share capital of 100,000 ordinary shares of $1 each at the start of financial year. The following transaction took place during the year. Issue 50,000 shares at 1.4, 15,000 bonus shares, 12% debentures of 100,000 share issue, bank loan of 75,000. In this case, what will happen? We have to take out the net cash flow. Net cash flow means inflow minus outflow of cash. When we receive 50,000 ordinary shares at the rate of 1.4, we will get 70,000. In bonus issue, we don't get anything. Debentures, we get 100,000. And 75,000 we paid as bank loan. So 95,000 was the cash. Net cash flow is 95,000. Getting my point here? Okay. Question 16. This is the end. Move to question 17. A company paid ordinary share dividend of $15,000 in the year. Where would it appear in the financial statements? Not in the income statement. These two options are useless. Under retained earning in the statement of changes or under share capital? Under retained earning, obviously. C option should be the answer. Getting my point here? Now, the equity of a limited company is shown. Start of the year, end of the year. Okay. Now, during the year, following transaction took place. Bonus issue of one ordinary share for every 4 shares were held was made. Debenture interest of 80,000 was paid. Interim dividend of 22,000 was paid. What was the profit for the year? When we are working on retained earnings, we are not going to include the debenture interest of $18,000 first of all. Okay. So this is a useless item. Now, what we have to do actually, we should know the bonus share. Because why we don't need to know bonus share? Because we have to settle bonus share through retained earnings. So what will we do? Bonus share is 1/4, means 25% of the shares starting at the start of the year. $200,000 was the share at the start of the year, multiplied by 25%, means 50,000 more shares were issued for bonus shares. Okay, and the rate of the par value of the share is $1, so it means bonus share of 50,000 number of shares multiplied by $1, the amount is 50,000. Got it? Now, see, retained earning at the end of the year, 112,000. Okay, minus 50,000 for bonus. Minus 77,000 retained earning at the start of the year. Okay, minus 50,000 for bonus share. Plus 22,000. Minus calculator 112,000 minus 50,000 minus 22,000 plus 77,000. $107,000. That is question number 18. Okay, 107,000. Okay. B option, 170. So what you have to do? 112,000 plus 50,000 bonus shares plus 22,000 interim dividend minus 77,000 starting, so 107,000. That's the easy way to calculate. Okay. Now, the following information is available: sales, purchase, average inventory markup. What is the rate of inventory turnover? I told you that what I have learned in ECCA. For all those questions where markup is 25%. So margin would be 20%. Remember, okay? So it means sales, out of sales, 80% is the cost. So 250,000 multiplied by 80% is 200,000 is the cost of sales. Okay, divided by average inventory, 20,000. So 10 times the answer. Okay. Okay. One thing, this 25% markup and 20% margin is only for this when markup is 25%, margin is 20. When margin is 20, markup is 25%. Please do not depend on this trick for other calculations of margin and markup. Got it? Question number 20. The trade receivable turnover of a business has been calculated for 2 years. This year, 60. Turnover has increased. Last year it was 50. So what could be the possible answer? Increased sales discount, profit margins, sales volume? No, liquidity problems. Yes, D option should be the answer. No other answer is valid for this. Okay. A manufacturing company employs 20 workers who are basic rate of $30 per week per hour for a 40 week. To meet a special order, the workers each worked 50 hours and were paid a premium of 40% over basic rate for the overtime. Okay. What was the value of wages? Okay, now, what we have to do first, we have to calculate the basic wages for 40 hours. 20 workers multiply by 40 hours multiply by $30. That would make how much? 20 multiplied by 30 multiplied by 40. 24,000. Okay. Achha, for overtime, overtime is 20 workers multiplied by 10 hours multiplied by 40, your whatever amount they are paying with premium. $30 is the basic hour multiplied by 140%, 42. The premium with the premium. Now they are not going to pay with $30 but $42, 40% premium. So 20 multiplied by 10 multiplied by 42. That is 8,400. So altogether that would be plus 24,000. 32,400 is the correct answer. Got it? Okay. Now come to 22. A company paid the following telephone costs. Number of customer inquiries 250,000. Total cost 425,000. Okay. Now, number of customer inquiries 350,000. Total cost 575,000. Okay. Achha. Telephone costs are semi-variable costs. So we have to calculate the fixed part of the cost. How we calculate? See, $575,000 minus $425,000. So difference is $150,000, and the difference of customer inquiry is 100,000 divided by 100,000. So that would make $1.5 variable cost of calls. Getting my point clear? So, acha, getting my point clear? Now $1.5 variable cost for customer inquiry, each customer inquiry. Now we have to check what is the amount of fixed cost. 250, when we were receiving 250 inquiries, multiply by 1.5, it means $250,000. 250,000 inquiries, multiply by 1.4, the answer is 350,000, and the total cost is 425. It means 75,000 is the fixed cost. Getting my point clear? Now, 75,000 is the fixed cost. Now, $305,000, 305,000 inquiries multiplied by 1.4. 427,000 is the variable cost of 305,000 inquiries. Plus 75,000 your fixed cost. That would make 500 and hold on, 500 and 2000. Like 5,000 multiplied by 1.5 plus 50,000, 7,000. Okay. Now, question number 22. Which statements are correct? When output increases, fixed cost per unit decreases. Correct. When output increases, variable cost per unit stay the same. Correct. When output decreases, total fixed costs stay the same. Yes. Okay. Third is also right. Total output decreases, total variable cost decreases. All are same. So answer should be the A. Yes. Now, 24. A company's fixed overhead details were shown as, okay, over and under absorption of fixed overhead. We have to calculate. Now see, budgeted hours is 10,000, budgeted fixed overhead 1,50,000 divided by 10,000. Answer is $15 per hour. Budgeted overhead rate, $15 per hour. Now actual is 1,70,000. See the flexed. Oh, sorry. If you apply actual hours with the rate, budgeted rate, we get flexed hour. That is 165,000. So 5,000 was under absorbed by. Okay, 5,000 under 25. Now following data, budgeted data is available. Direct labor hours 80,000. So what we have to do, if you divide 80,000 by $20, you get the hours. 80,000 divided by $20 means 4,000 hours. So what we do, we should remember 4,000 direct labor hours. 4,000 direct labor hours. Okay. Indirect labor is 12,000 plus factory expenses 36,000 plus depreciation on machinery 30,000. Total 78,000 divided by, we are not going to take depreciation of office equipment and administrative expense. Okay. Getting my point clear? No. No. Right. So 78,000, 12, 36, 30, 78,000 divided by 4,000. 19.5. A option should be the answer. Okay. There are 20 more. 23, 24, 20. Now 26. Okay. Revenue, it's like 50,000, variable cost is like 90,000, fixed production cost, fixed non-production cost are like 50,000, fixed selling and distribution cost. Budget said break-even revenue we have to calculate. So what we have to do, first we have to take out contribution. 650 minus 390, the contribution is 260,000 divided by 650,000, it's 40%. Now fixed cost 150,000 plus 90,000, 150,000 plus 90,000 divided by 0.4, 600,000. So answer. Fixed cost, total fixed cost divided by CS ratio of 0.4 and we get the answer. Okay, 27. Which statement relating to marginal costing are correct? Okay. See. Fixed production costs are included in inventory valuations? No. Fixed production cost is fully written as an expense? Yes, true. Variable production costs are included in inventory valuation? Yes. Variable production costs are fully written as expense? No. So 2 and 3 is right, so the correct option is C. Now, a business makes and sells 4 products, A, B, C, and D. There are so many ways of doing this question. Which product should be produced first when labor hours are not sufficient to produce all 4 products? What you have to do? First, we have to calculate the contribution. Contribution for every set. Now see contribution. Okay. Achha. In first case, option A. Option A. Contribution is $5. For B, contribution is 35 minus 10, 25. For C, contribution is 20. For D, contribution is how much? 75 minus 57, 18. Now percentage. Now come to percentage. How to calculate the percentage? Okay, be careful. Okay, what we have to do? Calculate percent. How to calculate? $1 divided by contribution $5. 1 divided by 5 percentage, 20%. Now, 5 labor hours divided by 25. 5 divided by 25 percent. 20%. Okay. Now, 2 divided by 20. 10%. 3 divided by 18, 16%. Now, which has the lowest percentage? C option. So, C would be more profitable. So, in case of limiting factor of labor, we have to concentrate more on C because C is producing less percentage of contribution to labor hours. Okay. Not the highest one. When does CVP analysis inform users about cost behavior? I must tell you one thing. I did not see time periods in CVP analysis. Okay. Are you getting my point? So, answer could be C or D. So, C means when the level of output is no, absorption costing we can't use. So, it means answer is D option. Done? Now move to the last question. Which statement about budget is correct? They are usually prepared by board of directors? I don't think so. They can only show monetary values? No. They have to be approved by shareholders? No. So B option is the answer. Okay. Sorry. So that's all for today. Subscribe my channel. If you want me to solve any particular paper, just leave a comment. Because these days only AS level is left with their MCQS paper. So I'm concentrating on the MCQS paper. And if you want me to solve any structured paper, I'll solve it after 10 June. Okay. Take care. Allah Hafiz.